The pharmaceutical and biomedical science sector is a cornerstone of Singapore economy, contributing significantly to GDP and providing high-value employment. If these firms face declining exports or cost pressure from tariffs, their operation in Singapore may shrink. This could directly weaken demand for both residential and commercial properties. At the same time, some firms may face exemption from tariff if they have breaking ground or under construction in the US. Going forward, what does this mean for Singapore as a pharma hub? More foreign direct investment in the States and less in Singapore? On the residential front, pharmaceutical firms employ many skilled professionals and expatriates who drive rental demand, particularly around research and industrial hubs like Tuas, Jurong, and One North. If companies cut jobs or relocate their function overseas, rental demand will soften in this area. In the long run, demand for mid to high-end condominiums, often purchased by these professionals or locals working in this industry, may also taper off, as fewer households will have the financial ability to upgrade from their HDB flats. The industrial and commercial segment will also feel the strain. Singapore has invested heavily in business parks tailored to life science and the pharmaceutical industry. Reduced activity in this sector could lead to higher vacancy rate and lower rental growth for specialized industrial properties, impacting the performance of industrial REITs. Industrial space in certain segments are already facing strong headwind. More vacancy rate only spell trouble to our competitive edge. More broadly, sentiment in the property market could take a hit, while savvy property investors are waiting on the sideline due to these tailwinds. Unsuspected property investors are still very optimistic, thinking that every day is like a Sunday. If the pharmaceutical industry, one of Singapore's key growth industries, is seen as vulnerable, buyers may adopt a more cautious stand towards big-ticket property purchases. Those that recently took on more mortgages will have to be extremely careful. They say the government is likely to respond with policy to diversify and attract new investment, mitigating some of these risks. Still, in the short term, the property market will likely experience slower growth and weaker rental demand if pharmaceutical firms are significantly affected ahead.